I've got some good news for anyone who's been keeping a close eye on housing costs lately. After climbing steadily for 3 straight weeks, mortgage rates finally took a dip. It's a welcome break in the pattern and gives buyers a little more breathing room. The average rate for a standard 30-year mortgage dropped slightly to 6.23% this week, down just a bit from where it was last week. If you're looking at a 15-year loan, which is a popular choice for people looking to refinance, those rates came down as well. They are sitting at about 5.51% right now. So when you compare this to where we were exactly a year ago, the difference is actually pretty significant. Back then, the 30-year rate was way up at 6.81%. So we are definitely in a better spot today than we were last year. You might wonder why these numbers shift around so much. It mostly comes down to what's happening with government bonds. Mortgage rates tend to follow the path of the 10-year Treasury yield, which is just a fancy way of saying they react to how investors feel about the economy and inflation. Since those bond yields dropped recently, mortgage rates followed suit and moved lower. It's a small change, but every little bit helps when you're calculating mortgage payment. Now let's talk about something that might sound like a bunch of confusing financial jargon, but actually means really good news for anyone looking to buy a house in Florida, not only in Florida, the whole United States. It has to do with something called the Conforming Loan Limit, which the Federal Housing Finance Agency, or FHFA, just updated for 2026. Think of the conforming loan limit as the maximum size mortgage that Fannie Mae and Freddie Mac, the two big government backed agencies, are allowed to purchase or guarantee. Why do you care? Because loans that fall under this limit are called conventional loans. They're generally easier to get, have better interest rates, and come with fewer hoops to jump through compared to bigger jumbo loans. The big headline is that for a standard single family home, the new baseline limit is jumping up to $832,750, starting on January 1st, 2026. That's a solid increase of over $26,000 from the previous year. Now, the reason this is a big deal for us in the Sunshine State is that the limit increase actually exceeded the rate at which home values rose in most of Florida last year. What this means for you, the buyer, is that a bigger chunk of our local housing inventory will now qualify for those excellent conventional financing options. If the limit hadn't kept pace, more and more homes would have been pushed into that jumbo category, which often means higher rates and stricter requirements. Of course, the price cap is even higher in truly expensive parts of the country. Here in Florida, only Monroe County, which includes the Florida Keys, qualifies for that special high cost designation, giving buyers down there an even higher limit. So while this rule change alone isn't going to suddenly make houses cheap, it's a huge positive factor that contributes to restoring buyer confidence. When you combine this expanded access to conventional loans with the fact that interest rates have been easing up a bit and income levels are rising, it all adds up to a much healthier environment for people who want to purchase a home. It's simply going to make the financing process smoother and more accessible for more homes across our markets. Hey, have you seen the latest numbers on home prices? Looks like the market is holding pretty steady right now. Across the entire country, home values went up by about 2.2% over the last year. It isn't a massive spike like we have seen in the past, but it shows that things are still moving in a positive direction. In fact, prices went up in almost every state, 44 of them to be exact. If you're wondering where the market's hottest, the Midwest and Northeast are really leading the pack. Illinois and New York saw the biggest jumps, followed closely by North Dakota, New Jersey, and Connecticut. On the other hand, a few states actually saw prices dip slightly, and Florida was one of them. It just goes to show that real estate really is local, and what's happening in one part of the country might be totally different from what's happening in another. When you look at specific cities, the story is mostly positive there too. Out of the largest metro areas in the US, about three-quarters of them saw price gains. A spot called Allentown in Pennsylvania actually had the highest increase of all, jumping nearly 10%. This data comes from the Federal Housing Finance Agency, which tracks millions of sales. So it gives us a really solid, objective look at where the market stands right now. Now let's talk about a really interesting shift I'm seeing in the market right now. For the longest time, the classic American dream was all about having a massive house with a huge yard and lots of space between you and the neighbors. But in 2025, that vision is changing in a big way. We are seeing a major surge in popularity for townhomes. And it isn't just about saving money. It is actually about a change in how people want to live their lives. So, why are townhomes having such a moment? Honestly, it comes down to affordability and lifestyle. We all know that housing prices and interest rates have been tough lately. Townhomes are often priced lower than detached single family houses, which makes them a fantastic entry point for first time buyers or anyone looking to build equity without totally draining their bank account. Plus, builders love them because they use less land and materials, which helps keep that purchase price down for you. But it's not just about the price tag. The lifestyle piece is huge. I see so many buyers who are just tired of spending their weekends mowing lawns and fixing fences. They want a low maintenance life where the exterior work is often handled by the association. This appeals to a huge variety of people. I'm seeing single women, who are actually one of the fastest growing groups of homebuyers, flocking to townhomes for the sense of community and safety. I'm also seeing single parents who want those neighborhood pools and playgrounds for their kids, and empty nesters who want to downsize without giving up luxury. If you haven't been in a modern townhome lately, you might be surprised. Forget the dark boxy narrow layouts of the past. The new designs are incredible. Builders are focusing on what they call function per foot. This means they might be slightly smaller in square footage, but every inch is usable. We are talking high ceilings that make the place feel huge, open layouts filled with natural light, and flexible spaces that can be a home office or a guest room. Since indoor space is efficient, there is a big focus on outdoor living too, like nice covered patios or porches. Of course, there are trade offs to think about. When you buy a townhouse, you usually have a homeowner association fee that covers that exterior maintenance and insurance, so you need to budget for that monthly cost. And yes, you do share walls with neighbors. If you're worried about noise or privacy, I always suggest looking for an end unit. You only share a wall on one side and you get extra windows, which makes it feel much more like a standalone home. Ultimately, this trend tells us that the dream home today is less about square footage and more about finding a place that fits your budget and lets you live the life you want. If you're willing to trade a little bit of privacy for a lot more free time and lower mortgage payment, a townhome might just be the perfect move for you. I just came across some incredible news about our local economy here in Florida that I really wanted to share with you all. Turns out that 2024 was a massive year for tourism in our state. We actually hit a record with the 143 million visitors. All those people coming to enjoy our beaches and theme parks ended up pouring over $133 billion into our economy. That is a huge number, and it has a direct positive impact on those of us who live here. What I found most interesting is how this affects our wallets directly. Because these visitors generate so much tax revenue about $33 billion last year, it actually saves Florida households money. The report mentions that without this tourism money, each of our households would likely have to pay nearly $2,000 more in taxes every year to keep things running the way they are. So, in a way, every tourist you see is helping keep our cost of living down. It's also great for jobs. The tourism industry supported nearly 2 million jobs in 2024. That means a lot of our neighbors and friends have work because people love visiting our state. Plus, for every single dollar a visitor spends here, 99 cents stays right here in Florida, helping our local businesses and communities grow. It really shows how connected the housing market and the general economy are to the travel industry. Seeing these kinds of numbers makes me even more confident about the real estate market here. When the local economy is thriving and people from all over the world want to be here, it keeps demand high and our communities vibrant. Whether you're looking to buy your first home or thinking of selling, it's always reassuring to know that Florida is continuing to grow and attract so much attention from across the globe. And for today's bonus, I wanted to chat with you about something that comes up constantly when I'm helping people buy homes. It's the topic of debt. I know that word alone can stress people out, but it's really important to understand that not all debt is created equal. We often hear that owing money is always bad, but that isn't really the whole story. It helps to think of debt as a spectrum. Some kinds can actually help you build wealth, while others can definitely cause headaches if you aren't careful. Let's start with what we call good debt. This is basically borrowing money to pay for something that will hopefully grow in value or help you make more money later. The classic example I see all the time is a mortgage. When you buy a house, you are taking on a large loan, but you're also gaining a home that usually increases in value over the years. Student loans are another common example because getting a degree can lead to a higher income. These loans usually have much lower interest rates compared to other types of borrowing, which makes them easier to manage as part of your long-term plan. On the other side, you have bad debt. This is usually money borrowed to buy things that lose value immediately or for one-time expenses that don't give you anything back financially. Using a credit card to pay for a vacation is a common example. The real trouble here is the interest rate. Credit cards often have very high rates, sometimes over 20%. If you only pay the minimum amount each month, the balance can grow out of control quickly. It ends up costing you way more than the original price of whatever you bought. Then there is a middle ground that we call neutral debt. This is where your personal context really matters. A car loan is a good example. Cars lose value the moment you drive them off the lot, which isn't great from an investment standpoint. However, if you get a low interest rate and you need that car to get to your job, it serves a valuable purpose. Home improvement loans fit here too. You might spend money fixing up your kitchen and not get every single dollar back when you sell, but if it makes your home more enjoyable to live in, that has value too. The big takeaway here is that the difference between good and bad debt often depends on your specific situation. Even a mortgage can become bad debt if you buy a house that's too expensive for your budget. If you can't comfortably make the payments, it's going to cause you stress regardless of what kind of loan it is. Before you sign anything, just take a moment to look at your whole financial picture. Make sure you have a solid plan to pay it back so you can stay in control of your financial future. So, what does all this mean for you? Whether you're looking to buy your first piece of paradise here in Florida or you're thinking of selling to make a move. If you found value in today's update, please hit that like button. It really helps the channel. And don't forget to subscribe so you never miss the latest on Florida real estate. If you have specific questions about your situation, drop a comment below or reach out to me directly. I'm Albert Stepniak, a realtor with Coldwell Banker here in beautiful South Florida. Thanks for watching, and I'll see you in the next one.